Welcome, everybody. It is June, also known as graduation season. And today we've got a fun topic. So, myself, Kim Nguyen, and Preet Singh, Mortgage Insiders Edition. Today we're actually going to be talking about a really fun topic, and that is graduation, more specifically for medical professions looking to get mortgages. As I'm not too sure if many of our audience members know or viewers, but there are specialty programs, right, Preet?
Yeah, absolutely. Yeah. So there are many different programs available from different lenders. So we will not talk about one specific lender. We will talk about a variety of different lenders. And Kim and myself will give you a brief idea if you are a medical student or if you are graduating from a medical field like dentistry, veterinary, and medical sciences like a GP or any other specialties, high-end specialties. There are programs from different lenders who can give you the financing right off the bat. As soon as you are a graduate, you can prove that you have been a graduate within that period from a Canadian university. Even offshore graduates, some lenders can also accommodate depending upon what documentation we have. And even if you don't have the income, they will use a projected income for you, and they will qualify you for a mortgage, a residential mortgage, right?
Mhm.
So yeah.
And
Mhm.
I think like one of the cool things as well too is that one of the biggest things I hear from my new grads, especially my clients that are going to school to become a doctor, they're always like, Kim, I'm going to graduate, but of course I have some hefty student loans. So what I always say, and Preet, I know you can shed some light too, is that when it comes to student loans, especially if you have like a professional line of credit, which is
Yeah.
very common for those in like the medical field, of course, the limit is larger, and if there is
Mhm.
a balance owing, I know generally speaking, if your balance or if your limit is over 50,000, there's actually a special equation that lenders will use to calculate that. So sometimes it may not impact your ratios as bad as you think it may, right, Preet?
Absolutely. Yeah, we have heard, all of us in the mortgage business, we have heard many different times from our clients that they have existing high student loans or high balances on their professional line of credits, and they are kind of, let's say, worried and fearful that the lender may not accommodate them with such high balances. So, as Kim mentioned, if the balance is over $50,000 on a standing professional line of credit or a student line of credit, banks basically term it out. They basically use it as a mortgage. They think, or the product is behaved like a mortgage. They will term it out over 25 years with a standard in qualifying interest rate. What it will basically do is it will help reduce the payment on that mortgage or on that loan, and that helps you qualify for the mortgage amount. Versus if they don't do it, then if they keep it as a line of credit, then we already explained in our previous couple of previous episodes that if it is a line of credit only, then the banks and the lenders basically use 3% of that outstanding balance as the monthly payment, which would be a very high end payment, Kim, right? So personally, I personally think it's a very good, like, let's say, step from the lenders that they are trying to accommodate the professionals with, or any like professionals with $50,000 or higher balance, and term it out and bring the payments lower so that the professionals can qualify for a mortgage. Yeah.
hmm And I think really like, like when it comes to medical professionals, the one
Mhm.
thing is that, our viewers should know is that lenders do love medical professionals, right? Like let's be real here because they understand that to get to where you are, to get to your profession, a lot of debt has to be accumulated. So they get,
Absolutely.
right? Like there's no
Yeah.
way around that. And again, this is kind of their way of saying, listen, we understand that you had to accumulate this debt, but you know what, we're going to make it a little bit easier to help you qualify. Like we know
Mhm.
that this debt, it will be a matter of time before you can pay it off, which is why it
Yeah.
is a little bit easy. Now, I know like within this program too, one thing that I always hear is, well, Kim, what if I'm in residency and it's my first year or my second year or my third year? Can I qualify at that point?
Yeah.
And the cool thing is, right, Pre, you can. So
Absolutely, you can. Yeah. Mhm.
Yeah, and again, when it comes to projected income that they will use, is that, of course, when you're day one done on the job, like when you've got your certification, when we search you up and we know you are a physician, it's all listed and you've got the proper credentials in Canada.
Yeah.
Lenders will use like a higher stated income, but even if you're in your first, second, or third year in residency, they will still have like a stated income, but again, it won't be as high as what it would be when you're officially done. But don't
Okay.
panic though. There's still income that they can definitely use for you.
Absolutely. So the good news is, even if in the you're a medical student in the first year, as you said, there is still a hope that you don't have to rent. You could buy maybe a smaller condo and stay close to university, less commute time, and all that stuff, right? So that will help you to qualify for that mortgage, even in the first, second, or third year. And if you are 100% qualified, fully licensed, and the professional designation is already showing up on the College of Physicians in different provinces, right? So the lenders basically search you up, verify it, and there you go. They use the projected income, and it's so easy to use the projected income rather than providing multitude of documents as a normal mortgage. And I would love to do all those deals like that. So
Yeah, totally. I hear you. And I think the one thing that's really cool about this program, and I've helped a lot of medical professionals in my career, I
yeah,
think many people think that you need a lot of money to participate in this program. Like the common thing I hear is,
mm,
well, do I need to save up 20% down? And the answer to that is no. You
no,
don't need 20%. You can actually do it with lower than 20%. Of course, it will be an insured mortgage, which means you will have to pay the insurer premium. But
yeah,
generally speaking, I know like we're seeing about like 10% down is kind of the minimum that we're looking. There can be
absolutely.
exceptions to be a little bit lower, but generally the rule of thumb is about 10% down, right?
Yeah. And even in 10%, I would say that if the first 5% is your own money saved up, that's golden. The other five could be gifted from your immediate family member. That would help you. But if all of that 10 is your own, then it's definitely golden, right? So yeah, definitely. The minimum you could start from is, let's say, 10. On exceptional basis, we may be able to find somebody who is able to do with 5% down, but again, no guarantees, right? So yeah.
Mhm. And I think the one thing for our listeners today is that just know that with this program, again, it's a projected income program. And again,
Mhm.
the professions that it really does gear towards are, new doctors, new physicians, vets also are included. If you're in dentistry, it is included. But just know that with each particular profession, it is a different type of stated income. So don't
Yeah.
think that it's going to be the same across the board.
Mhm.
Generally speaking, like if you've got like a medical specialty, like if you're specializing in something like dermatology, that might be a different stated income than somebody who's going into dentistry, right? Or
Sure.
somebody who is a general practitioner, right? A general GP, a medical
GP.
GP.
Yeah. Mhm.
Yeah. Yeah.
Yeah. So that basically the banks or the lenders have came up to those numbers from their own experience, what they have seen from the past, and they have basically, let's say, put down a threshold number that this is the minimum or maximum they will use for that specialized category or the field of profession, right? And they use that number as a benchmark across the country, right? So having said that, again, this is projected only. Like if you have your own confirmed income, which is higher than the projected number, then we don't even need to use this program. Like let's say you have been 2 years or 3 years into your profession, and that income is already available on paper, then we will straightforward use that income from T4s and T1s, right? So
Mm. Or even like a letter of employment pay stub, right? If you've
absolutely,
job,
absolutely.
you've
Yeah.
got a really nice offer at a wicked medical firm or whatever the case may be, that's something that we will always look. And as your advisors, Preet and I, we're always dissecting the whole deal to see which one would make sense, right?
Absolutely.
For
Yeah.
the client and just know like when it comes to specialty program, one other thing too that I'd like to make note is there's no difference when it comes to interest rate. A lot of people think that, oh, I'm using a specialty program. What about
Mhm.
my interest rate? What about my payment options? What about penalties, all that good stuff? And the thing is that it's pretty standard, right? Like I think
Everything.
Yeah.
Everything is the same. Everything, only the qualifying. I would say the first line of the qualifying criteria would be different, where we mentioned that it would be a specialty program to use the special kind of income, but rest all the prepayment privileges, like as you said, penalty zone or whatever the case may be, will be identical to any other mortgage that you would qualify with the confirmed income.
And there's no rate premium as well too, which is nice. A lot of people think that, oh, I'm utilizing a special program, I'm gonna get it dinged on the interest rate. No, that is not necessarily true. Okay,
Yeah,
so with these kind of programs, it is standard across the board. But
absolutely.
yeah, but I think all in all, like, what we're trying to say is it's graduation season. So if you're listening out there and you know a medical professional, don't give up, right? There's definitely hope to get into home ownership. There's a lot of programs available out there. There's creative ways to make it happen.
Yeah,
And all you got to do is just reach out, right? There's definitely options available.
absolutely. Yeah. I think this will be good for our listeners and viewers all across our social media channels. And if you feel free to call us, contact us, any one of us, anytime, and we would be happy to help you out. Yeah, absolutely. Happy graduation and best wishes for your future.
Thanks, everyone.
Take care, guys. Bye bye.